Good evening and welcome to the Australian Stock Market Show. With the All Ords breaking to a new all-time high last week, are we now heading to 9,000 points? Stay tuned as we'll discuss our thoughts on that shortly. And for our main topic in tonight's show, we get into how you can make 100% trading the top 5 ASX growth stocks that are ready to buy now. First up, we'll share our hot stock tip for the week. So sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. There's been some carnage in the market the past few days and we'll help you make sense of it. We're also excited to share our thoughts on some great stocks like Wesfarmers, CSL, BHP, the All Ordinaries Index and more. So strap yourself in as tonight is shaping up to be one where our team get into some big discussions. I'm Dale Gillum and I'm your host for tonight, and joining me are two of Wealth Within's highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. And together, we're Australia's most trusted stock market educators. Good evening, team. How are we?
Good, thanks. Much better. Looking like I've got a bit more spark back in me, haven't I?
Well, I hope so, because tonight's going to be a red-hot cracker of a show, because I don't know about you, but I've had phone calls from different people saying, is the market crashing? So we're going to answer all that tonight, aren't we, Phil?
Oh yeah, panic. I mean, you know, it's funny how the phone, as you said, just doesn't stop ringing during these times. But as we said on Monday, trends and markets, they don't crash in one day, do they?
Well, they don't, do they? Well, anyway, tonight, as mentioned, we do get into the All Ordinaries Index, but first, let's take a look at this week's hot stock tip. Phil, what have you got for us tonight?
Yeah, sure. The hot stock tip for tonight is AGL Energy Limited, stock ticker code AGL. So let's get straight into it on your screen. Right now is themarketindex.com. And AGL Energy Limited obviously is an energy provider company providing Australia's private electricity, and some performance metrics on AGL. It has a 2024 year-to-date return of positive 10%, which is quite nice. A one-year return of minus 9.44, in line with the sector on a one-year basis, which is around 9.89, but it is performing slightly better than the ASX 200 on a one-year basis, which is doing minus 14.5%. Now, this has a market cap of 7 billion and a stock that is ranked within the top 100, ranked 82. So again, one of the better known names on our market. Now let's go to the chart so we can have a good look here at what's happening with AGL. And first I want to bring up the monthly chart for you here. And I mean, this stock, just one look at it, obviously we can see here that it's had a very, very big pullback back from the 2017 highs, where the stock's fallen around 83 odd %, which, I mean, when you're looking at this whole trend, given the way that it had been rising for so long, some may call that, you know, a capitulation, but the recovery throughout here is, I guess, potentially giving some investors a sign that, hey, it's a really, really healthy pullback. But we'll get into that a little later on. The reason I did bring it up is because that 83% fall is the largest fall for this stock over its history. The second largest was around 68% back in 1987 during that famous 87 crash. Now, what's real interesting about AGL big picture is this particular level at $5. You can see it's acted as support for a period back in 2000, 2001. Again, we've come back, so it's really proven itself as a strong support. We always say, look for stocks when they come into these big levels, how they react. And we are seeing those signs of strong reaction. We're seeing higher bases on multiple occasions. It's starting to respect this momentum line. And what's really interesting right now, Dale and Janine, with this one is the fact that it's broken through the most recent momentum line. It's poked its head to the other side. So we're seeing multiple confirmations of trend reversal for this, which is really exciting. And it is coming back, to me, potentially that $13.50 level, which was, I guess, if you will, a level of fair value where price was agreed upon for a very, very long time on this stock. And even at levels from now till $13.50, there's still about 28% in this one. So, you know, could be quite likely for your short, medium term and long-term traders also. But moving to the weekly chart, I just want to add one more thing. And what's real interesting is that since coming out of that low, we can see this particular bar. I want to focus on this bar because look how strong this bar is, and really it signifies this is where the really strong selling came into the market. And what's really important about that is that since creating this strong buying, the market's never really gone below this level. It's tried to come into it. And so to me, that tells me even in the short-term view that this stock is holding up, given with all the carnage on the market. It still looks strong. Volume is coming up as well.
Stable,
so,
isn't it?
what do you think,
It's quite stable, isn't it? Which is interesting compared to other stocks on the market at the moment. So look, I like it. I think it's a good choice. Ideally, I'd actually like to see it pull back below this low, have a bit more of an unfolding to the downside before it takes off, but it could just go straight through there, couldn't it?
Well, yeah, given the way, obviously the market has come off, and a lot of that is, we're going to get into the market anyway, so I shouldn't jump the gun too early, but the way this is holding up is definitely a sign that you should take note of.
Great.
Totally agree. Well, that is it for our weekly hot stock tip. Now, shortly, we're going to get into our topic for tonight, but right now is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth, so pick up your phone and dial 03 9290 9988. Now, while you do that tonight, we will give you our thoughts on the All Ordinaries Index or the Australian stock market, so let's get into it.
On your screen right now is a chart of the All Ordinaries Index. And what you can see here is the degree of the selling that Phil was just talking about earlier. And it went to a low, look, it's about 4% so far this week, which is quite significant when you look at it. But it's not out of the ordinary. We have seen lots of these moves over time, especially over the last couple of years where the market's gone sideways in this more volatile fashion. We've seen a lot of the sellers coming in and then the short sellers following behind to sort of push that down. You can see January 2022, there were 2 weeks down, and it's possible we could see the market go down for another week or so. Just looking at this, I have had a few best and worst case scenarios for the current pullback that we've had. If it takes out this low here, that sort of changes the tune for me a little bit in terms of the downside. And I'd really, in that case, if it does, I'd prefer to see them. So we're down about 6% at the moment. The Dow is about 7%, I think, at the moment. But I'd actually prefer to see it come back towards this level here, which would be about 10% down for the drop. That's be 7,500 if it does take out that low over here that I just mentioned, which was the low in April 2024. But it could just track sideways for a little while. We've seen on the daily, if we go to the daily chart, that nice move down there. And some people are probably saying, what do you mean nice? But we've had a couple of days down, but this isn't sort of normal for our market these days, just the way that the institutions are trading these days. I personally have seen such huge changes in the way that the pre-open works and the auction works at the moment. Just the liquidity is different now. So, to me, that means that, these sort of moves that we're seeing on the market, you've just got to get used to it.
Yeah, and I think you're right there, because obviously modern technology and algo trading and all the other things that they've brought in, which are some of that stuff that we disagree with, and obviously all the short selling that they do and securities lending they do, there's a lot of things happening on the market just creating this volatility. But the big question everybody's pushing out at the moment, as I alluded to and Phil alluded to earlier, is they're going, the market's crashing. Because we talked a little bit about it on yesterday's stock market report that Phil and I did for talkingwealth.com. And I remember I said, during 2022, everybody was saying the US market was going to crash. And I said no, and everybody thought I was crazy all year long. And it didn't crash. So I want to ask you, is the stock market crashing now, and is it going to crash? So I'll go to you first.
Well, look, what defines a crash? We don't know whether the market crashes until it's fallen 20%. Well, that's the theory anyway behind it. We could, if we saw another couple of heavy weeks of selling, then I'd say that, we could go down more significantly than I'm expecting. But at the moment, that's not the scenario that's more probable.
And what about you, Phil?
Yeah, look, from history, we know that, most notably 07, 08, we saw the way the price unfolded around that period, and it wasn't a flash situation. The market takes time to build up those selling positions, and it gives you an indication if you know what you're looking for. Whereas during COVID, it was that big, quick flash crash. And to me, if you see something similar to that nature, then it's probably something that'll reverse very, very quickly. But in terms of the market crashing right here, right now, I mean, just look at, if we go back to the chart and have a quick look, the market since January or since October 2023, and this is the thing that a lot of people fail to think about, but it's gone up over 20% since that low in November, and it's come down, less than half of that, almost a third. So to me, it's natural. Stocks ebb and flow in waves, and they do come up and they come down. And quite often what you'll see is in the most bullish trends out there, the biggest one-day falls or one-week falls generally happen during those times. So right now, the fact that it is coming back into a level that is, the market had been consolidating for a very long time around that 7,900. I think now, let's see what it does from here. But
I guess we also have to think about that. When there's someone selling, there's someone buying. So there's some opportunists out there that are picking up stocks at the moment and thinking, I'm going to get them at lower prices because in a bull market, it's a bit more forgiving, isn't it?
Yeah, I know. We'll be talking a bit more about that in the bonus section of our stuff for our Talking Wealth viewers. But anyway, that is our thoughts on the Australian market right now. Now, before we get into our first email, remember to get your questions answered live on air, you will need to text or call into the show. But you can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Now, a new investor is looking to get into the market. Francesca asks, hi Janine, Dale and Phil. I have $2,000 saved to invest for the long term. I've decided to start with 2 stocks, $1,000 in each. Now I've bought NCK or Nick Scali at about $14.90. Plan to hold long term. It ticked all the boxes for me fundamentally and technically. For example, PE ratio, EPS, good management, a nice looking monthly chart. I put a trailing stop loss on it. I'd love to know what you think, particularly on the fundamentals. So I'll go to you, Janine, first.
Yeah, look, I'm just looking at the chart here. This is an interesting stock because it's quite volatile, and I hope Francesco's quite experienced and brave in the market, I guess I'd say, because, it can shoot up really quickly, which can be great for the upside. Fundamentals, I wouldn't necessarily worry too much about the fundamentals. Look, there's 30% in a very short space of time. So that's telling me straight away that this is, higher risk stock. While it's been going up, that's great. But it could do just the opposite. I'd be watching this level down here. That's all I'd be concerned about. I'd be forgetting about the fundamentals right now. But consumer discretionary will do well in a bull market to a certain point. And if you've watched our show a couple of weeks ago, I think, Phil, we talked about the different sectors of the market and which ones peak first. And consumer discretionary tends to peak early before others, miners and financials, later on. So in this case, I would just make hay while the sun shines. If it takes out those highs, we've got 3 highs there at the moment. This top over here, way back in 2021, and we've got the more recent ones here. Well, if it goes through those, it could be a really nice little trade.
Look, the fact that there's a trailing stop in there, that's a big tick for me.
That's a big tick. She's broken home to 2 $1,000 passes. Love that as well.
Exactly. But I mean, just going back to the chart, really the question right now is when you're looking to trade these stocks, it's understanding the rate of rise. And when you do see, we've spoken about this so much time on the show, when you do see stocks moving, extremely sharply, what other word could I use, but sharply in an upward direction, which is fast, yes, which is not, I guess, to that natural gradient or more sustainable gradient, which would be somewhere along this period through here. There's a sustainable rate of rise, and then you get something a bit sharper, and then you see an inevitable pullback. Here it's much sharper, you get the pullback. So what I would say is measure the rate of rise, and once you start to see it get very, very sharp, my answer would have been get a trail under there, which is already done.
Did she get in too early though? That's the other thing, because
someone
who doesn't know about technical analysis perhaps may not realise the significance of these 2 tops here. Being so close together, it was so important. So I perhaps would have waited for that to be cleared. That's all I'll say.
Good advice. Well, now we have a caller on the line. Now we welcome to the Australian Stock Market Show. Who have I got on the line?
My name is Sujesh, S-U-J-E-S-H.
Fantastic. Well, thanks for calling in, Sujesh. What's your question for us tonight?
I'm holding KAR, Karun Energy.
Yep.
I bought it 1.95. That's $1.95.
$1.95,
and
yep.
Now it's going down, and I'm just want to know whether I can hold the stock, or it's better to get out from that.
Okay. When did you
take the
buy it?
loss. And, I bought last month.
Last month? Okay. And was it short, medium, long-term intention to hold it or what?
It's a medium term.
Medium term. So you bought it at $1.95 last month with the intention of holding medium term. Currently it's going down, and you want to know whether you should continue to hold that. Is that correct?
Yeah, that's correct.
Fantastic. Well, thanks for calling in, Fujesh. Phil, what do you reckon?
All right, yeah, let's go to the chart and have a good look for you, Fujesh, because it's an interesting situation you've got on your hands with Karun Energy. So if we go to the chart right now, and we'll start on the monthly chart. Obviously, you bought it. We'll zoom that out last month, I believe, which is around there, and the stock's fallen away. Now, I mean, there's two ways to look at this. Obviously, Karun, in the bigger picture, is coming out of this significant low in March 2020, and it is experiencing a bit of a pullback. Now, you know, it might just find its way back through to these levels. I mean, there is support around here. So the stock may be just finding its feet through this pullback. And so, you know, having that medium-term outlook is probably going to bode well for you. But the more important question to me is, is there risk in place here? Is there a stop loss in place? Or are you just going to let this run all the way down? Because right now, you know, there is a case to say that the trend is reverting back to the downtrend. So how are you going to protect your position in this instance?
Well, how will we know, like, when that's confirmed? So if we just have a bit of a look back on the weekly, so obviously if it takes out that low in June 2024, then that trend down, that's what Phil's talking about, Fujesh, will continue. And the risk is, isn't it, that it could go all the way back to that low down here. That's what I guess I'm a bit concerned about. If it takes out that point, the next level of support's down here. Which
really speaks to how much are you willing to, you know, give up on this trade if you are wrong? Do you have any measure in place to protect yourself if it does continue to fall? Because if we just go back to the chart real quickly, why we say that potentially the trend may have changed. If we draw this momentum line, you can see it's on the other side of that now. And this may just be a natural pullback to this longer term up move, or in fact, there may be a reversal and the resumption of this long-term downtrend. And so, you know, one thing that would have helped is having some confirmation or some strong rules around why you're buying this stock initially. And to me, looking at it where it is placed right now, last month probably didn't give any real confirmation for me looking to buy that stock. And so right now, I guess they're the two questions you're left with.
Well, often, you know, people are emailing in or ringing in because the stock's falling away because they didn't get their buy right. And that's the challenge of getting your buy right, but even then getting your exit is even more important, as you guys mentioned. So I think it's great advice for Fujesh. But welcome, and thanks for calling in, Fujesh. It was really great you did that, but make sure you get a stop loss on that stock. Now, Sky is compiling a watch list and wants our help. She writes, "Hi, Dale and Janine. What about Phil?"
Oh, maybe she doesn't want me to answer this one.
I want to know you, mate.
Okay.
Anyway, I'm looking to compile a list of 8 to 12 stocks for a portfolio for short to medium term, and I'd like your thoughts on one particular stock. I've just started my share trading and investment course journey with you, and currently doing module 1. I have a Talking Well subscription. Well done. The stock is GQG. From fundamentals, it appears to be growing well from November 2003. Looking to make a buy on the uptrend. Is it still a good time to get in now or wait for a pullback? What do you reckon, Janine?
Wow, that's a mouthful. Can you start again?
I had to say it, not you. You just had to listen.
Can we look at the chart then and see what...
We can have a look at the
chart. That would
chart.
be really helpful. So we've actually put some fundamentals on there just to have a look and see what's going on for an idea. Now, for a stock that's accelerated away like it has, a PE ratio of 18, I'm not really concerned about it. It's still under the 20, and look, frankly, anything that takes off like a growth stock, it could go into the low 20s. EPS, you know, I need to make sense of that based on history, so I don't have the history to know, but dividend yield is a nice dividend yield, so that would attract a lot of people to the stock. Looking at it right now and what's going on, it is a volatile stock, as you can see. I mean...
Not much history either.
There's not a lot of history, but look, gosh, you know, a stock that is consolidated, this is often the smart money accumulates stocks sideways after a big pullback at the right time. But really the safer time to get in is once it breaks out of all of that, which happened back here, this was like early 2024, and then it just took off. Now there's an uptrend line for all of that to protect the capital as it's going up and protect profits. And now it's actually trading below that line. So, you know, given that line's been broken, it's sort of a bit of a question mark right now as to what could occur. I would be watching to see next week if it swings back up again and tries to sort of hug the underside of that line.
Well, I mean, she's starting module 1 of our course, of the Wealth Within course. Now, if you were talking to a student, which she is, and you're giving student support, would you be looking at a buy on this stock, or if you?
I'd say not the right
it?
stock. Great question. Not the right stock for a start. Yep, that's the first thing. It's falling, so therefore you wouldn't be looking to buy it right now. I'd wait till you get to module 3 until you've got actually enough knowledge to be able to do some really good back testing on this stock to work out a strategy.
So, okay, take out this week. Meaning it's only 2 days into this week and last Friday. So the mark, obviously that last bar is a fairly decent down bar. Take that last bar and it does change any of your comments?
It doesn't change my comment about not the right stock for someone who's just starting out.
But would you be looking to buy this stock?
No, because it's been on such a steep trend.
Okay. Do you want to add anything to that, Phil?
Oh no, I think you've said it perfect. I mean, and it's great that, you know, module 1, hey, remember that? How many moons ago? But
it's such a powerful module, isn't it?
Oh yes. Well, it gives you that first foundation in terms of you know, understanding what you're looking for, how you're looking for it, and all that kind of stuff. And you will get into the juicy buying and sell rules later on. So I think once
I'd say well done
my advice would be
there.
get back to doing your study and get through the course, and then start looking at stocks.
Yeah, well, there you go, Sky. There's I was going to say thumbs up from the team, but they didn't give you a thumbs up, really, did they? But they're giving you some
thumbs up for
encouragement.
doing the education.
Thumbs up for doing the education. Well, anyway, we've got a text now from Rebecca who is asking thoughts on MP1. That's Megaport. So I'm assuming if she's asking our thoughts, hopefully she's looking to buy it, not in it already.
Potentially. Who knows? Let's have a look at the chart for you right now. Megaport, but an interesting stock. I mean, for me, this one, I've been watching this one for quite a while. It is giving you some really interesting type of price action. Obviously, coming out of that nice low, we found support in February 2023, had a strong rise late last year, and then another really strong rise early this year, and now it's pulling back. So, I mean, from a technical perspective, as stocks make these higher bases, you saw it all throughout the history with Megaport. There's one example there, a second, a third, a fourth. As long as the bases keep forming at higher levels, then there's nothing to be too concerned about if you're already in this stock. Now, I mean, depending on where you've bought it, of course.
Yeah.
But if you're looking to buy the stock right now, now's the best time to start looking at it. That's
looking at it but not buying it?
Not buying it right now, because obviously the stock's still falling. So
Yeah, no, we've got to be careful with our words.
yeah, we do. All right, so don't buy. But do definitely look, because these are the opportunities you want to be looking for. Right now, it's about getting your rules in place, getting your strategy down pat, so you can really, hone in on that right entry, and that'll add to your bottom line for sure.
Perfect. Well, good advice there from Phil. Now that is it for our take on MP1. Would you like to know how to double your money? Well, with the stock market, that means making 100% on your trades. Sounds easy, right? Well, after all, the internet is riddled with fancy ads saying, hey, would you like to make X% return with no knowledge or experience? But let me ask you, how many of these show you how to actually achieve these great returns? Well, I want to get straight into the panel's thoughts on this. Now, Phil, you're a full-time trader who makes his living from short-term trading. What's your take on somebody wanting to make 100%? Firstly, how achievable is that? And more importantly, how repeatable is that?
Well, very, but it depends on how you classify 100%, okay? Because a lot of people, when they say 100%, they're thinking, a stock to double in a price. But we're talking about how you structure your trade and how much risk versus reward. So what is the risk you're placing in the market? So for example, if you're putting in a $10,000 trade in the market and you use stop losses, you're willing to risk $1,000 on that trade. So you want there to be enough room for you to double that movement to make $1,000. So that's doubling your risk on the trade. And we'll get into that a lot more to cover
so you're
it
talking
off.
about one for one?
One for one, basically, yes.
Okay, well that's fine. Now, Janine, you're more conservative, so what are your thoughts about this? Around it all? I mean, do you make 100% or... Is it the right way to go about it?
Yeah, look, I mean, it really depends, and it depends on the strategy that you're using. So everybody you'll all be different. Some of you will want high growth, you might want income, you might want short-term income, could be long-term. So everybody's different, and the stocks are different as well. So that's where the challenge is. And you've actually got to use history to prove to yourself whether you can actually make 100% on a stock. As in, is it your capital? You put 10,000 in, so you want to make 10,000 on that trade, or is it, as Phil was talking about, if you're risking $1,000, you want to be able to make 1,000, 2,000, 3,000, whatever it is on that amount you're risking. So there's different parts, but look, one of the most interesting things was actually going through lots of different exercises with some of our students when they're doing their own trading and they're learning back testing. And they might look at their back testing results and say, oh, I've got this great result. I've made, I can make $40,000 on trading this share. And most of it might have come from one trade, depending on the stock. Now, I'd much rather have a stock that gives you a more consistent return than have one trade that might have been 10 years ago that punched the lights out, and maybe you'll get another trade in the next 10 years that does the same. But, so you've got to really ask yourself, what do you want?
What do you want? And be clear about all that anyway.
Yeah.
Okay. So what you're saying is there are layers to making 100% on trades, and that it's important to know what your underlying objective is for your trading capital. Now, every week on this show we get questions on this, and we find the most common approach is that people are trying to trade penny stocks to get these high returns, but is this really the right strategy, Phil?
I mean, we've shown time and time again on this show. Obviously, for one, going to that end of the market requires a lot of skill, a lot of knowledge about liquidity, about orders and all that kind of stuff. So it's not for the, new trader or amateur, and that's where most new traders go. So in terms of the movement, sure, there may be that one, as Janine said, that hits it out of the park and does give you that big return, but a large portion of these penny stocks end up dwindling sideways, and even if they do run, a lot of the time it's the liquidity which is an issue for you to transact, and if you can't transact, then there's no point in even being in there.
No, I agree with that anyway. Well, I'm glad you mentioned that anyhow, but take a look at what money.us.news.com has to say about the success of penny stock investing. It says, for inexperienced investors, the potential upside of a stock trading for just pennies per share may seem compelling compared to a blue chip stock with a market capitalisation in the hundreds of billions of dollars and a stock price higher than $100. Now pay attention to this part. Unfortunately, while there are a handful of penny stock hidden gems that have made spectacular long-term investments, some experts estimate that up to 99% of penny stocks ultimately fail. And as you can guess, what this says is not a surprise to me. In fact, I've read lots of research in that area and they all come to the same conclusion. So why does so many still go down this dead end when looking for those big returns? Quite simply, it really boils down to two main market fallacies that fool investors into looking at penny stocks, which I want to actually get into this. Now, first is that many of today's stocks were once penny stocks. But is that really true, Janine?
Well, look, it's interesting, isn't it? Because, people often think that they can pick the future, next big stock. But it's not that easy. It's quite difficult actually to pick that. Now, we know that with some of the big stocks today, you'll find that stocks like FMG, a classic example, that actually started out as a penny stock, and I'm talking something below $1. It's mining stocks that tend to do this, that you've got more of a chance of doing that. But the reality is that how many people are actually going to hold it long enough for it to turn into that big stock? And that's the thing, the ups and downs that some of these stocks go through, you're far better off to actually wait till they become better quality stocks.
Yeah, not all. I mean, a lot of stocks don't start as penny stocks. I remember when Combag floated, Qantas floated, I remember Westpac floating. None of them were under $1 when they floated. Yeah. So it is a fallacy. Well, the second fallacy is there is more room for appreciation and opportunity to own more shares of a stock that is low price. Now, true or false, Phil?
False. I mean, but I can kind of understand it because when you're looking at a stock that's 1 cent and you've got $1,000, you think, oh, I can buy so much more at 1 cent than I can buy at $10. But at the end of the day, it's your $1,000 that's at risk, or the $1,000 that you're investing. So regardless of the share price, it's the same amount. Now, in terms of more room for appreciation, I mean, we've covered that pretty much. Sure, they can, but being on that one out of so many that don't, and we haven't spoken about this too much, but trends, they take the best part of a trend or a up move happens about 2/3 of the way through. Generally, a lot of the stuff at the bottom of a trend as it's rising is hard work. So, as you said, you could be sitting in that stock for years upon years of it doing nothing, sitting there with all the opportunity cost miss of stocks that are actually running. So you've got to be wary of that.
Well, you've got to be mindful of you've got a 1 to 2% chance of getting it right, according to experts.
Yeah.
And I've seen that research heaps of times, and they all come back with around the same 1 to 2% chance of getting it right. But all right, so if penny stocks aren't the way to go, then how do we get a return over 100%? I'm going to go to you, Janine. Be the more conservative view at the moment.
Well, look, I mean, it's interesting, isn't it? And look, to get that return over 100%, you've actually got to know the stock well.
Yep.
You've got to know that history of the stock, how it moves, and you can look at that on the chart. And as I said, you can do the back testing to determine what's more probable, but it's all about knowing the
So I
stock.
can't buy and pray or read my crystal ball or
No.
throw a dart at
You
the
could
board
read a
or
broker's report,
flip a
but
coin.
that's not
Any
necessarily
of that
going to
work?
help you either.
All right, anyway, Phil, I'm sure you've got something to say about it too.
Look, I totally agree with Janine. Obviously, strategy is the most important thing, how you structure your trades. But secondly, go into traditional sectors that are more volatile. So things like, explorers, pharmaceutical stocks, these ones do provide a lot more volatility. Generally, again, that comes with a big caution and caveat because you do need to know what you're doing. Every time you try to begin structuring a trade is going to require skill because obviously, there'll be stops and all that in place. So, maybe some of those sectors.
Yeah, I mean, just to wrap up, I think a lot of people in those sectors or those smaller cap stocks, they're trading more and they're creating that ultimate sin of overtrading because they're trying to make those money and they're not going to be able to do it. But anyway, you did mention something very important earlier, and I actually wanted to go back to that, mate. It's how you structure your trade that will ultimately decide if you can make 100%, even trading blue chip stocks. Can you elaborate on that?
Yeah, I mean, look, anytime we get into a trade, really, it comes down to two things. Where are we willing to cut the loss if we're wrong? And what is our likely potential target? And so when you're walking into a trade, you're looking at a chart and you're thinking, okay, how much does this have potential upside that I'm looking at? And obviously we say run with the trend, but initially when you're looking at a chart, you have to weigh up whether it's worth the risk to get in the first place. So it's running through that process and working that out. And what you'll find is when you're good at reading through charts, you can nominate where you place your risk or your stop and then try to measure that up versus how much profit potential you have. And that gives you that number in terms of whether you're looking at making 100% on your risk. So if you're willing to risk $1, you're going to make $1. And that all adds up as you go through trends. Obviously, we're going to show you some cool stuff. But
all right, well, how about we show them? How about we bring
Yeah.
up some stocks and actually show them some of the stuff we're talking about?
Yes, please.
You want to start it off, Phil?
yeah, sure. We've got some great examples here, and we're going to go through the whole gamut. We're going to talk to long-term investors, medium-term traders, short-term traders. We're going to show you that it's applicable everywhere. It's just about being very skilled, or not even so, well, yes, being skilled at reading a chart and knowing what you're doing. And this is the first example that we have. Now, it's all about the structure of the risk and reward. Obviously, we're saying here it's possible on the monthly charts, but looking at this scenario through here, obviously for our students that know, there is a potential as the stock's moving through, there is an entry through here. So at this point in time, you're looking at it thinking, okay, I'm looking at this stock, I'm looking at getting in on this stock, and my initial thought, I look to the left-hand side and see where the stock failed in the past. So it's through this level here. And just the simple marry up of what is my profit potential versus what I'm willing to risk. You can see there's a 13% risk versus a 16% gain. That's more than 1 to 100%. So that makes sense from that example. And then there's so much more. This second example we've got here, and this one is where there's an entry through this level. You've seen the stock pull away, it's come, it's tested, it's given a really strong move here, and you're thinking, okay, I want to get in on this trade, but I'm looking to the left-hand side, I'm thinking, oh, this is where the stock really struggled in very recent history. It's where the biggest fall happened. So if I get in through here and I place my risk through here, it's about a 33% risk and only a 15% potential just to this level. Now, we know the stock broke through, but you're thinking, okay, this is not going to give me that 100% opportunity.
Well, you don't know it's going to do that at the time, do you?
But that's the whole point. You've got to weigh it up, whether it's worth
Before you trade.
before you're trading it. But then on the flip side, if you just play with where you're placing your risk and you decide, okay, it's a really strong move, I'm going to place my risk a bit tighter, and then you turn that opportunity into a 100% opportunity.
But in your experience, I mean, you've been supporting our students for years when you've worked for us in the past. But Janine and I have been doing it for over 2 decades. And it's interesting when you get these people coming in trading penny stocks, they don't do any of what you talked about beforehand. They're looking at some sort of report or something saying this penny stock is great, and they go, cool, I can buy a lot of them, which is mistake number one, with my $1,000 or $500 or whatever they're going to put into it. And then they think this can go from 5 cents to 55 cents and I'm going to make a mozza, which is mistake number 2. Because that generally doesn't happen, or if it does, it happens so quick they miss it, and then they get the inevitable crash on the other side.
Or the company can actually go broke as well, some of those small
Correct.
companies.
And the most important thing that I think about as a trader, you want consistency and you want to protect your capital. So,
But that's not as much fun.
Well, maybe not, but it makes money. But the point is, those penny stock traders, for example, let's say you decide to put one whole position in on 10,000 and you're all in, and it's like if it goes up, it goes up. If it doesn't go up, well, so be it. Knowing how to structure your trades, you could have 10 goes at the same opportunity, and really you've got 10 goes to be right rather than just one go to be right. And if you're trading stocks that are more liquid and the high cap stocks, obviously that the percentage is going to go up so much higher. But you're giving yourself one option where it's all in versus a place where you can consistently get in the market and get money out of it.
All right, let's show them another example.
It's a good idea.
All right, so next, Janine, do you want to get onto this one, or do you want...
Look, I mean, BHP is an interesting one, isn't it? I mean, it's a very, quite a volatile stock because it's in the mining space. And if we're looking here, we can see there that there was an opportunity here. We've got a line there, momentum line down here. And as it broke through, this was back in December 2020, it was showing signs of strength. So it was about looking for the risk there. It was a 17% downside, but the problem was when we're looking at the chart and where the previous resistance was, there were 2 tops here. These go way back to 2011, and then that was the GFC one. Such a strong level. So the idea is you've got to look at your risk, because you can only work on what you know, not what, you've got to think about what could happen, but this is more concrete. So it was only an 11% upside, and therefore, you'd be looking at that and thinking, no, I'm not going to look at it on the monthly, but how could I do something differently on the weekly and potentially still be able to double my the reward, get a nice reward for the risk that I'm willing to take. So here was an actual potential entry down there. It was possible to get a line down here, momentum line down there, and then looking at it when it broke out of that, deciding on where the point was that you were happy to take the trade. Now, it might have been at this high here, or it might have been lower than that. Let's just say we've got this green line here, 13% risk for a 16% upside. Now, that was based on that prior high. So this has actually flipped it over and changed the situation just by the way of the time frame that we're looking at. Instead of monthly, we've gone weekly to get a better result. And in the end, the stock went well and truly through that. So you might have been able to get out higher.
Well, it speaks to, a lot of times people will look at an opportunity, and if the risk reward doesn't weigh up, they'll throw the opportunity out the window. But these are moments where you can, still be on that opportunity. But if you just take a little bit of tweaking in the way you structure it, you can make it much more favourable to you.
Okay, next one.
Next one, all right. So next one is CSL, obviously. Now, this is a real interesting scenario because, obviously this stock's in a long-term uptrend. So you can see that, we've said the best techniques for achieving 100% and better conditions, there's none better than a long-term uptrend. Very simple, very easy. But then on the flip side, there's the argument that, hey, if you just bought this stock and held it the whole time, you'd still make 100% on your money, which is a very...
Yeah, because what was it? It was, what was it?
So if you bought it at about 100, about
130,
100.
140?
Yeah, 130, what is it now?
300.
300. So even if you bought it at around 50, you can say, okay, I've made...
You've doubled your money.
You've doubled your money. But where I guess it makes it a lot more lucrative or lucrative in terms of what we're saying here is the fact that in these scenarios, so you could place say you've placed a $5,000 entry at $1.50, right? And so you double your money, you get $10,000 after however many months, years it's gone up to there. But this whole period through here, if you traded that with these favorable risk reward scenarios. So here you've got 14 to 40, so that's almost 5 times. Now if you placed a $1,000 risk on there, you've made 5,000 just to there. And then if you add, this is 9 to 44. So if you add another trade, 9 to 44 is
400%.
Yes, yeah, almost 5. So there's another 5,000. So you've made more money by, getting in on that market and structuring your trades.
But it's about the risk. That's the point that you're making as well, because not everybody's going to just continue to hold a stock while it's doing all of these ebbs and flows going higher, and so that's part of the point. And also the point you made was it's fit for purpose. So what is it that you're trying to achieve here? Are you trying to make sort of more an income, put some money in the bank and then take some money out and then put that on the market again, but you're always building your buffer, building your bank account up, and that's what you're really talking about, isn't it?
Yeah, it's about how you can structure that trade to really maximise that return. Now, again, that also this does come with skill. So you need to know, because the closer you get to the market, the closer you start to structure these trades, there is potential that the market can go against you and tick you out on these stop losses that you do have. So this is not, I guess, as basic as it may seem. It does require skill, it does require knowledge.
In saying that, some of the stocks that you've picked, it'd be easier to do it on stocks like this.
100%, yeah. It's those really favourable market conditions. They're always long-term uptrends. Whether it be long-term, short-term, medium-term, but especially when you do try to structure and capture the most, it's like eking the most oil out of a move, if you will, rather than making X amount, you can make 3, 4, 5 times that amount just by the way you position that trade. So the next stock we have for you, if we can move on, is another example here, which is NAB. Now, NAB, obviously a huge bank. You might be thinking, how the hell am I going to make 100% on NAB at these levels? But I mean, just some simple.
What's interesting is if we go back to the monthly, and you got in down here, which there was a nice little entry there at about $20. It's now, recently it was up to $40. So,
Yes, no, you're right, but it's again okay. So this is a perfect example, Janine, because so you get in at $20 and it goes to $40. You've doubled your money. But what if instead of putting your risk, let's just say to here, so 20%, right? There's your risk, and you've invested the same amount of money, and it's gone to 80. So now you've made 4 times your money rather than double.
4 times your risk.
Risks.
It's a different way of looking at it.
Yes.
The reason I like this way of looking at it, Dale, is because when people are thinking, I want to double my money, there's a lot of sort of like emotion in there and greed that's in there. Whereas this way, it's more structured way of thinking. You're not trying to sort of say, you're not trying to bet that you're going to get 100% on something. You're saying, okay, I'm getting 100% on my risk, which is a very much more of a trader's way of thinking about it. Psychologically and from a risk management point of view, it's a smarter way of thinking.
But I've been teaching traders for nearly 3 decades. You've been teaching them for well over 2 decades with me. How often do you get these people that trade penny stocks thinking anything like what you just said?
They don't trade the penny stocks in that way. And often I've seen some people, not the ones that have done our course, but people who come to us, and the reason they come to us often is because of that. They've picked up these penny stocks. They might have gone up 100% or even more in some cases. And then there's been some news that's come out, like just right near the top, everyone's talking about it, gets publicised. Next thing, the stock either halves or it goes right back to where they bought it.
So they might get a couple of winners, but they give all their money back to the market. Generally, that's what actually happens all the time. So we got another stock?
Yeah, we do. And just on that point, I mean, it's a lot harder to enact a strategy where you're getting in and out of the market on a penny stock versus a stock that is highly, highly liquid. So I would say that they would struggle to actually trade a penny stock like the way you could trade, a BHP or a Rio or a FMG. But yes,
Let's bring up another stock.
We do have one more.
You're like Janine, there's always one more.
Yeah, yes, but again, this is another example, nice little example. Now, again, this stock is running quite a very, very strong bull market for Wesfarmers. So it's how can you eke out some extra returns from this? Now, one train of thought could be that you could run multiple strategies. You could run a longer term approach, and then this is maybe a shorter term addition.
So you're talking about daily chart now?
So I wanted to show the whole gamut. We showed weekly, we showed monthly, and I want to show daily chart that it is possible on all time frames. Again, it really just depends on how good you are at structuring your trade. So for example, looking at this from a very basic perspective, stocks found some support through this level. So it's like, okay, I could buy one position and hold it all the way through, or I look at this and I think, okay, this is the initial level of previous resistance. Something, oh, is there enough around these levels? Well, you get, if you were to trade it through this, you get a nice 100% return through there. And again, as the stock breaks through the previous level through there, you get another opportunity to get through to new all-time highs. So you're always seeing these 100% opportunities on the market. It's just about, again, I know I've said it a lot, but being able to think about it in that way and being able to structure your trades to capitalize.
So structuring trade, proper buy rules, proper sell rules,
all that.
Proper money management, proper understanding of trends, direction of trends, strength of trends. The list just goes on.
And there's something in this for everybody, whether it's long term, short term, medium term, isn't there?
The most important thing you said was money management, and that is, I guess, if you had to pick one thing as a trader and investor to be good at, is being the money manager, because that's what's going to keep you in the market. It's going to allow you to, constantly compound and grow your money.
And we've got some more juicy stocks and lots of other things.
Well, I was going to say that we've got a whole lot more juicy stocks and a lot more in depth on that subject or the subject around these stocks and making 100% in our bonus content for our talkingwealth.com members. But anyway, thanks for that, Janine and Phil. Now stay with us as we'll be right back after this short break. This week on Talking Wealth,
meet ERP expert David Ogilvy discussing the critical steps to avoid common pitfalls in ERP.
Enterprise Resource Planning Systems drives all parts of the business. My goal is for that business to be not only better off, but have built much more depth and build the breadth of that knowledge in the business.
Back on Talking Wealth, Andrew Griffiths shares insights on navigating crisis as a business owner.
The key is we've always got to be navigating. We've got to be prepared to take action, to leap in and not wait.
Learn essential wealth development tips from Mike Bainbridge, emphasizing the importance of financial education at any stage of life.
There's been gambling issues where people have lost all their wealth. We should be ensuring as best we possibly can that the retiring athlete is aware of those traps when they go out into the market.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth.
That amazing content you just saw is going live this Thursday on Talking Wealth, and every Thursday we upload new videos. So stay tuned to the end of our program tonight to learn how you can access Rod North's interview titled Investment Clock. Is now a good time to buy or sell shares, and you get it completely free. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 03 for Melbourne 9290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. We're now going to turn to a uranium company for our next question, as Damien asks, "Hi Dale, you have a great show there, thanks mate. Could you please give your review about Paladin Energy?" Man, a few words. How about we go to you, Janine?
Look, I'll forgive him for asking about that stock. Okay, Damien?
Because it's uranium, Damien. She doesn't like uranium, but Paladin could be a great stock.
Okay. Well, we said that some time ago, but look, it's had an actual bummer of a run since then, hasn't it?
You sounded happy with that.
She does.
Did you detect
Every time
that in my
uranium
voice?
goes down, she's happy.
Yeah. So looking at this, we're seeing 3 months down at the moment. Now, it's actually gone down further than what I actually thought it would. 47% decline there on that monthly chart, coming back to find support on these previous highs here. So it'll just be some weeks before we know whether this is the bottom, but it actually may be the bottom. It looks like it could be turning around here, but look, you just don't count your chickens, Damien, until they've hatched. So looking here, we can see there's some support there from that previous consolidation, which is a nice little consolidation, but again, the whole scenario for me has changed on this stock given the way that it's pulled back. And so, I'm just waiting to see that confirmed.
Yes, well, I might give him some maybe good news with this one, but look, there's not that much good news.
You're trying to make it up?
Yeah, if we just go to the chart, I'll go to the monthly chart for you here, Damien, but obviously, this stock, since coming out of those 2020 lows, is starting to form. We often like to say when stocks fall, they give that basing type pattern and then start moving on up. this is doing that somewhat, but I think what's important now is this $7.58 level where there's been that nice consolidation for this stock. It's very common for stocks to come back and test where they these particular setups or price unfoldings, because this is where there's been agreements on price. So there's been value there. So they often do come back and test. So I wouldn't be surprised if it comes back to test $7, maybe around $6. But again, once it does that, if it does that, the next thing you've got to think about is confirmation, and confirmation in terms of, has it stopped falling? How are you going to decide that it stopped falling? And what rules are you going to use to get in on this stock? Which are three very...
Well, I'm assuming Damien doesn't have it, because why would you hold a stock that's fallen this much?
Is he holding it?
No, I'm just saying I'm assuming he's not holding it.
Oh, okay, yes.
Because it's fallen this much, because anybody that's got rules would never hold the stock that's going to
You'd be out already.
You'd be out already. So I'm assuming he's looking for it to find some support and going up. So this, you're saying it could happen.
Well, look, I'd
sometime
suggest
soon.
that he write back, in about 4 to 6 weeks, and let's just see how it's
What
going.
about
then.
every week with a new stock? Okay, we'll
okay.
do that. Okay. Anyway, now we have a text from Paula who is asking thoughts on, well, a long ticker code here, SGLLV, whatever that is. Had a nice pullback, and I would like your opinion purchasing now for the short to medium term. What's the stock?
Rice
Rice
Growers
Growers.
Limited.
Wow, look at that move. That looks just
Wow.
classic, doesn't it? That's lovely.
Bit of liquid, but
Oh, look, but you know what? That's just a beautiful pattern, beautiful breakout. But has it finished? Well, let's just get a closer look. Look at the close. The close is at the top of the bar in a market that's been quite volatile. So that's really nice to see. Gosh, if it actually...
Buy now, though. That's what she's asking.
Oh, I just think it's not the right time to buy right now, given that we've had 1 week of weakness. Obviously, looking at this, just for learning experience here, you can see that there's all of this resistance across here. Somewhere in there would have been a nice entry opportunity there. But now you've got some more risk there if you try to take it. But look, I wouldn't try to do that until it's gone through that high anyway.
yeah, it's a new stock. I mean, it hasn't been around for a long time, 2019. Obviously, it is still now floating around. If we can just zoom in on here to have a quick look, the float price is, where are we? Mark up the float price there. So I guess, it's not uncommon for stocks once they list. We've seen this pattern time and time again, breakthrough, fall out of bed with all those early investors, and then starting
Spend most of its time.
find its base, and then find its way back around the float price, which is what this stock did for quite a while.
Good point.
It's obviously broken out now, and I'm with you, Janine. Given there's not much history on it, new highs, I wouldn't be buying it right now. And the most important thing is you really find out how you're going to trade this stock, because you're in that expansion type phase. So what rules are you going to have to, one, keep you protected, and two, get in on the action?
All right, great advice from Phil and Janine there, Paula. So please heed what they're talking about. Now we've got a caller on the line. Welcome to the Australian Stock Market Show. Who have I got there?
Oh, hi, Dale. Janine, Phil. It's Jodie speaking, and I've just got a question. Thanks so much for your section on penny stocks. A question about EPS, which you guys often mention as a good way to try and determine a sort of a quality stock versus a penny stock. But when I go to look on different platforms, the EPS can be written in so many different ways, and it's very confusing. Sometimes it's like a whole number and it's a fraction, and it's very confusing. So I'm just wondering if you could sort of differentiate the different ways that the EPS can show up, on these platforms.
Absolutely, we can talk about that. Sometimes they're in cents per share, sometimes it's in percentage terms.
Hang on, you're supposed to ask us.
What?
Not
I'm
giving
getting in
the
trouble,
answer.
Jodie.
Hi, Jodie.
I was trying to be nice. She's a
Hello,
lovely
Jodie.
lady, ringing in and asking a good question. So
You were
back in
trying
your
to
box for a
you were
second.
trying to be chivalrous, I
I'm
know.
trying to be, thank you. Thank you. Thanks for calling in, Jodie. I'm going to go to Janine right now to answer the question.
Well, funnily enough, don't want to sound like an echo, but EPS comes in cents per share, as Dale rightly said. I wouldn't want to say that you're wrong. And then it also comes in percentage terms. So we're looking for earnings growth 1 year percentage to 2 year percentage, or 2 year average is something that I really like to see. If it's a short-term trade, I want to see a 1 year percentage growth forecast, that is, and a 2 year forecast. But get the average, and then that's what
I think
gets
the
me
important
excited.
thing is not just the number itself and how it's calculated, because EPS is looking forward, isn't it, Phil?
Yes.
So that's what we're doing. So we're looking forward to the growth.
Well,
in
some
that.
of it's history. It could be
Yeah.
historic EPS, and that's why we're talking
But that's
about
what I
the
was getting
percentage
to now.
growth.
There's two components. Is one is the EPS is looking forward to what it's going to be in 1 year, 2 years, 5 years, whatever that is. But what you're saying is the second component is what is the difference if the EPS is 1%, 1.1 and 1.2 over the next 1 and 2 years. There's not a lot of growth there. But if you've got 1%, 3% and 8%, that's a whole different ball game, isn't it?
Well, generally that's how it's looked at. You know, they measure the last 2 quarters or 2 years, and they look forward and see, okay, is this growing and all that kind of stuff. But I mean, importance on EPS, obviously we're major technical.
Look, if you can match the EPS with the technicals
Yes.
in terms of the growth forecasts, you're doing well. In a lot of cases, that you know that'll support the growth in the share price. So that's the ideal scenario. But like Phil said, we're not going to rely on it heavily, are we?
No, we're not going to rely on it heavily, but in terms of fundamentals, we put much more weighting on that than we do on a PE and all the dividend yield. So that's always the first metric we look at, because as traders, we're looking for growth first at all stages, and EPS will give us a good indication of that. But anyway, someone's trying to butter us up, team.
Right.
As Angelo writes, hey, legends.
Right.
Wondering if you have a chance to look at SHL. I purchased on confirmation of 2 closes above a downtrend line. I have a tight stop loss at the recent low of 1 July 2024. I've noticed the longer term momentum for the high in December 2021 shows a potential upside of 10% from the current price action before reaching this resistance. Now I'm looking to trade for the medium term. Would love to hear your thoughts on this. I'd go to Phil now.
Okay.
What do you need us for? You've got a stop loss, you've got a target, you've done all the work. I mean, fantastic, everything you've done on this
Okay,
stock.
turn the lights off, let's go home.
Yeah, done our job easy, time for a beer. But look, let's go and have a quick look at the chart for you. But I mean, I have to say, you know, you've got your stop in place, you're looking at it breaking through a momentum line, you're obviously identifying, and this was the major, I guess, point of today was before you're getting in on that trade, identifying where the potential road bumps are, where that resistance could be, where could your trade turn back the other way, and weighing all that up. So I really love the fact that you're thinking about all this stuff, because I can see it too with what you're saying. So now it's just a matter of letting that trade play out, I guess. You're already in it. I don't mind where you've got your stop. It looks like the short-term momentum shifting. Is it a medium-term play? Depending
And it hasn't
on
been sold off heavily with the market either. I'm just looking at that, the move this
oh
week.
yeah, compared to
Some stocks.
exactly. It's just really, to me, it's just a question of what you deem medium-term. And if you're trading weekly charts, then I think stick with that and let the trade play itself out. I guess you've done everything you can to this point.
So you're being nice to Angelo because he called you a legend. That's what you're saying?
I actually, yeah, I really
He's done well.
I think he's done well. Yeah.
There you go. And Janine's nodding her head up, Angelo, so well done for that when you watch the video. Give yourself a pat on the back. Now, with the market falling last Friday and obviously yesterday and early this week, Paula is asking us to comment on that. She writes, hi everyone. I was wondering if tomorrow night you can spend a bit of time going over what is happening in the last few days with the Australian stock market. That was going great, and now just following suit on the big drop on the US market. Is it possible that even Fed cutting rates now cannot save US stock market downfall? It looks like the fear of the big recession in the US, rising unemployment, and also geopolitical situation has triggered selling everywhere at the moment. Is this fall a healthy expected one after a nice uptrend, or could this be an early warning? Janine.
Look, I think that's pretty well covered it. I really like that whole thinking, the way that you've thought this through. It could be, although sometimes these sell-offs can be an early warning of a short-term low coming in, so it could be that. It could be the sign of something bigger, but we won't know that, as I said when we looked at the All Ords earlier in the show. The US market's just coming into a cycle low. It's not quite normal for the market to do that. And we could postulate all night about what happens in the US and what the Fed does over there, whether it's going to make a difference. But at the end of the day, we just have to wait and see what the chart shows us.
I mean, I know there's probably a couple of things in that. Now, obviously, they're saying, threat of the US being a recession. It's been in a recession for a couple of years. They just don't want to say the R word. But when you look at anything that's going on in the US and in Australia, like Phil and I have mentioned this a few times on our market wrap that we do every week, is whilst we haven't had two negative quarters of GDP growth to consider the official R word for a recession, Australia's been in a recession, and if you have interest rates up so high for so long, you're going to affect employment. So both the US Fed and the Australian Reserve Bank, they've got interest rates too high, and they had them too high for too long, so they're not quick enough to pull them down. They're always too late to push them up, and they're too late to pull them down. So, I'm not worried about it. I really not. This is pretty normal, isn't it? Now, I know Phil and I'll let you comment in a second, but on our market report, we talked about we're thinking the market will move up to its high in the next 2 to 4 weeks and then move into the next low in October. But it doesn't mean it's not doing that early, because sometimes we don't control the market. We just know that it's going to have a low sometime in the third quarter of this year, and we've moved into the third quarter of this year. But generally it would have been, we were thinking October, maybe September, maybe November, but probably October. You want to give any thoughts on that?
Oh, just quickly, I mean, big picture, watching big picture price and charts. I'm not watching daily movements or weekly movements, looking at the big picture. It's always shown in the past that early indication of when the market's really likely to turn over, and it'll show you again in the future. But right now, there are no signs of that. So I would say stick to the charts to give you that indication, because I mean,
it's too early anyway.
There's so many times where the market should have done something, and how many people after the GFC, how many experts came out and said, "Oh, this is why the market crashed," and,
they always got
and
a
this
reason
is why
for
everything. But no one picked it beforehand. So I mean,
we did.
Oh, well, yes, technical traders did actually a lot. Yes.
Yeah, we did, but you're right. There's always got to be some reason the market's falling, and generally it's irrelevant anyway. Well, now we have a special offer for those watching on YouTube and Facebook. If you'd like access to Rod North's interview titled "Investment Clock," is now a good time to buy or sell shares, where Rod, Phil and I discuss the best time to buy and sell shares and the cycles of the stock market. So it's really interesting, especially relevant for today. Then click the link in the description on this video on YouTube below. You'll get access to the full interview on Talking Wealth completely free. Now remember to show your support for our channel and smash that like button. If you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. But before we let you go, what was your favourite part of our show tonight? Was it our hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below. Thanks to those who are watching on YouTube and Facebook. If you are watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies in our bonus content. We'll be right back with all of that and more. Next week in our main topic, we get into the top 10 metal stocks now trading at cheaper prices. BHP, Rio, FMG and more. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.